In this video, I'm going to show you this Excel spreadsheet that you see on your screen, which is designed to calculate the selling price of products. So if you buy and sell products and want to know the selling price you need to set to achieve a certain profit, this spreadsheet will help you out. If you're interested in this material, it's available for purchase at the link in the video description. This spreadsheet is quite comprehensive and allows you to determine the selling price of products, whether they are made up of other products like cakes, pizzas, or desserts, where you need to buy various ingredients to create your final product. And it also allows for pricing products, which will be the case study in this video. So, for example, you buy a ready-made product like a smartphone and you want to figure out the selling price for that product. And it also allows, which will be the case study of this video, the pricing of products. So you already buy a ready-made product, like in our example, a smartphone, and you want to reach the selling price of that product. How much do you need to set the price for this product to achieve a certain profit? Pricing is going to be pretty straightforward. We need to enter the product cost. Desired profit margin will be explained later. Pricing isn't just adding a markup. Pricing involves calculations to cover product, fixed, and variable costs. But before we get to that point you're seeing, and after I show you how to price in bulk so you can price several items at once, I need to tell you that pricing products isn't just about taking the price you paid and adding a value on top. Pricing has to involve a whole math behind it to ensure that you can cover not only the cost you paid for the product you're reselling, but also the fixed and variable costs of your business. So, what are these two types of costs? Pricing has to have a whole math behind it to ensure that you can cover not just the cost you paid for the product you're reselling, but also the fixed and variable costs of your business. What are these two types of costs? These are costs that aren't directly tied to the goods you're selling, but they weigh on your business and should therefore be included in the price. To input this data, we have two tabs here in the spreadsheet. We have the Fixed Costs tab, which is the one you're seeing, and we also have this other one, which is the Variable Costs tab. Now I'm going to show you how to input the data in each of them. First, fixed costs. What are fixed costs? These are the costs that will occur at the same value, regardless of how many products you sell throughout the month. So let's say you work selling smartphones. You buy smartphones and sell smartphones. In this case, whether you sell one smartphone or 100 of them, your rent for the store, salaries, maintenance fees, all those amounts will stay the same. So those are fixed costs. They won't change based on how much you sell. That's why you should think about what the fixed costs of your business are. I've already brought some examples here. You need to think about what the fixed cost is and what its monthly amount is. Insert it here in the spreadsheet so that it can actually and effectively pass that value onto your selling price. In addition to the fixed cost, you should input your monthly revenue here, meaning what your average monthly earnings are. I put in $35,000. You need to see what yours is and input it here, because with this information, the spreadsheet will find a percentage that should be added to the selling price to ensure that your selling price includes a composition of fixed costs. After the fixed costs, we move on to the variable costs, which, as the name suggests, and unlike fixed costs, are costs that will vary depending on how much you sell. For example, if you have transaction fees, you lose 3% per sale. Consider this amount and input it in this tab. Reflect on any variable cost as a percentage of the selling price and list the cost name with its percentage. After inputting all, the spreadsheet calculates the total percentage. Any variable cost, that is a percentage of the selling price. You should think about and put down the name of that cost, along with the percentage of the selling price that it will take from each sale made. After you input all of them, the spreadsheet will already show the total percentage. You might also be thinking about what you do with variable costs, meaning those that increase as you sell, but they aren't percentages, they're in cash format. For example, with each sale you make, you have a custom bag that you put your product in. so that the customer remembers you, has a brand from your store, and all that. In this case, it's not a variable cost. Okay, I get that with every sale you make. You have this extra cost, but that's part of the product composition. What do you have to do? You need to go to the pricing tab and add the price of this bag, in our example, to the price of your product. So, for example, it would be $603 here. For example, this smartphone, $600 for the smartphone and $3 from the bag, but it's just as an example, in case this happens to you. After entering the fixed and variable costs, as we saw, we move on to the specification, which becomes quite simple when we get to this point. You're going to enter the product name and the cost of that product here in the pricing tab with known costs. In addition, you'll enter the desired margin. What is the desired margin? It's a percentage that represents your profit after paying all the fixed costs, variable costs, and the cost of the goods. If at the end of the month, for example, you've sold $10,000 and you have a profit margin of 20% in your product pricing, that means 20% of $10,000 is $2,000. That's your profit. You'll be able to cover fixed costs, variable costs, the cost of the products you bought, and still have a profit of $2,000 left over. So this percentage that you enter here is quite important. It will adjust the selling price to ensure that you always make that percentage of profit that you're putting in here. So, once you've entered those two values, the cost of the product and the desired margin, the spreadsheet tells me to sell this smartphone for $1,179.78. You'll want to round that up, so you'd sell it for $1,180. That's the mathematical number the spreadsheet gives us. $79.78. $79.78. Of course, you're going to want to round that value up, probably selling it for $1,180. But in this case, that's the mathematical number the spreadsheet gives us. How did the spreadsheet come up with that number? It took into account percentages for fixed costs, variable costs, the margin you want, and it arrived at a price that will ensure everything fits within that selling price. In case you don't believe it, here next to me, I have a little demonstration that will show you how to turn $1,179 into $235 in profit from just this one sale. How do you do that? Check this out. You have the selling price at $1,179, and then you have the costs that will start to show up on that sale. You have all those variable costs you reported, which will always take a percentage of that sale amount, totaling $129. After the fixed costs from the sale, you have $214, which is 18% of the sale amount. Why $214? Because you remember, back in the fixed costs you entered, your total fixed cost value, compared to how much you sell, was 18%. For every sale you make, you need to save 18%, so that monthly 18% portions you've been accumulating, the total fixed cost offsets them. The product costs $600, and adding variable, fixed, and product costs totals $943.82. Selling at $1,179, you still have $235 left over. We also have the cost of the product, which is $600 in this case, and when you add up all three lines, meaning all the variable, fixed, or product costs, we have a total of $943.82. Since you're selling for $1,179, you still have $235 left over. That's the net profit you have from this sale after paying everything that needs to be paid. So, this spreadsheet is extremely dynamic. As you change the cost, it will adjust the selling price. If you change the margin, it will also change the selling price. If any fixed or variable cost changes, the pricing will adjust too. If you change the margin, it will change the selling price. If any fixed or variable cost happens to change, the pricing will change too. So that's why it's important for you to use this spreadsheet to facilitate your flow. What we've seen here is the pricing of just one item, but you can price multiple items at scale, all at once. For that, you need to go to this tab I'm showing you now, which allows you to calculate up to 50 products in one place without having to keep changing the names like we saw earlier. So, for example, in this case, I added a smartphone, a laptop, wireless headphones, and a gaming console. To do that, you need to go to this tab I'm showing you now, which lets you calculate up to 50 products in one place without having to keep changing the names like we saw earlier. So, for example, in this case, I added a smartphone, a laptop, wireless headphones, and a gaming console. You enter the product name in the first column, what the cost of that product was for you, and what the desired margin is for the sale you're aiming for. With that, the spreadsheet calculates the selling price for each of those products, and it shows you the amount that should be allocated for fixed costs, variable costs, and your profit margin. Remembering that in this case, the spreadsheet takes into account those percentages of fixed and variable costs that you had informed. If you want to stray from that rule, there's another tab here, where you can input your own fixed and variable cost percentages. Although I wouldn't recommend it, it's an option you have as well. So, as we saw, this spreadsheet is excellent for pricing products inside Excel. It's an extremely simple product pricing calculator that can help you achieve healthy, profitable, and secure pricing. If you're interested in this and want security for your business, you can purchase this material through the link that's in the description of the video. I hope you liked it. We'll see you around, and take care.